Hello and welcome to FountainFX on Wednesday the 19th of February 2014. As you can see from yesterday, price was actually down around about the 137.10, and we were looking at it following a doji from Monday where it was President's Day in the US and nothing really happened in the market. And basically I said, look, price is still pushing up, it's showing it's still in a strong uptrend. We needed to be aware of this particular area of resistance, but as it was on a very long wick, don't see it as very strong resistance, and we can see that its price has actually broken through that. The 137.40 has been pushed up to a high of around about the 137.70, so it's pushed 30 points above that. We may want to use that for an area of support if we want to continue in this uptrend. But the key thing is to look at this area of resistance here. Price came up to it and fell away from it, and then it came up, and when it touched it the second time, should I actually say the third time, third real touch, it fell further away from it. So there could potentially be some significant sell orders of the euro against the US dollar in at this level that we need to be aware of, because from there price has actually fallen a good 300 points when previously it only fell 150 points. So we are looking at a potential area to expect to see price turn. Not guaranteed, but based on supply and demand, we need to be aware of this area of resistance. So if we're in a long at the moment, we need to have 138 as our target to take profit from, and while we then look to see what else may happen to the euro against the US dollar. Ideally, if we are bullish, when we want to see it break through this area of resistance and come back and use it as an area of support for us to then buy and continue in the trend. So what do we do today? Well, if we have a look at what I did yesterday, I'm going to go into a lower time frame, 60 minutes, and we can see here I put in a buy and a stop order based on this level. They weren't triggered because price came all the way back down to slightly above there. That was me being more cautious than I needed to be. I put in a buy order around about the 137. Had I placed it around the 137.10, as we see up here, that would have been a nice trade. I'd have been triggered. I'd have still had my stop down here, just at the previous low. So I'd have been triggered into that trade. As it was, I was trying to be a bit too more cautious in terms of my entry, so my buy order was based on the previous low, not this low. Had it been based on this low, when price pulled back down into this level, I'd have been triggered on this wick and it would have carried on. So just to be aware, sometimes you can be a bit too cautious in your trades, like I am, but don't worry too much about that. Better to not lose money than be a bit more frivolous with it and be losing all the time. And so 137.10 would have been a great entry there, as we can see now. Hindsight's always the best educator, but that would have been a nice 60-point trade. We'd be up here at around about 50 points gain at the moment. So what can we do? How can we get in on this long trend or long trade at the moment? Well, we can see here that at this point we had a pullback and prices pushed back up, so it may be a case that we look to buy at this area, the 137.50. But you know, otherwise there's various different techniques you can use. You can basically place a buy stop above the high here, the 137.70, but bearing in mind 138 is where we're looking to hit resistance. Personally, I wouldn't be looking to buy into this market at the moment now. I'll be waiting to see it get to 138 or near to that, and then look for an opportunity to sell. Another reason why I would look for an opportunity to sell, well, Paul from Bloemfontein has called up just to asked me to clarify the difference between fundamental analysis and technical analysis. What we're doing here in terms of looking at the charts and looking at price levels and momentum in which price moves up and moves down, that's technical analysis. But the technicals are based on the fundamentals. You can't necessarily read the fundamentals because the technicals are how you actually read the fundamentals, if you understand what I mean. If I flip over to a news report, then you'll understand what I'm talking about when I talk about fundamentals. So we're looking at a Market Watch, which is the online version of the Wall Street Journal, and this is basically telling us about George Soros, who's one of the largest investors in the US stock market. and it's telling us that he's put a bearish bet on the S&P 500 of a value of $1.3 billion. So he's taking $1.3 billion to sell the S&P 500. That's a very large order size, and you should expect to see a reaction on the S&P 500 when that order gets triggered, to cause the S&P 500 to fall. Now when the S&P 500 falls, in correlation to that, the Euro-US dollar will also fall. Not precisely in line, etc., but it has an effect on the Euro-US dollar. The reason for that is that bullish investors, as in those that buy and sell to make profit, so those that go long, they expect to make profit when the price of something goes up, they've been investing in the S&P 500 heavily for the last year or two, and it's been pushing the S&P 500 up to higher and higher levels. Now, if they know that he's going to be selling to the tune of 1.3 billion, it would be clever for them to say, right, well, it's now time for us to also sell and take profit from our long trades, so we can at least bank profit, rather than watch him sell the market and watch him push the price down and we lose some of our profit. So the rest of the market will start to sell as well, and that will have a trigger effect. What will actually happen in terms of the trigger effect is those people who've been investing in stocks in the S&P 500 will now shift it into the dollar, and so they'll start buying the dollar instead of buying the stocks, because they can see the stocks are falling. They'll wait until the stocks get to a low value before they then switch back into buying the stocks again and buying the S&P. So this is how some investment funds operate, and how they move money from S&P 500 and the US dollar, and they switch between the two. So what you should expect then is, if people are selling the S&P 500, that they will then be buying the dollar, and if they're buying the dollar, then that will be increasing the dollar value against the euro, and so you should expect, based on these fundamentals, to see the euro fall against the US dollar, and so therefore around about the 138 we may start to see a plummet of the euro, and the euro might therefore start to push down quite heavily. And that's really it. That's how you compare fundamentals with technicals. It's good to have a balance of the two, and that helps you in terms of your trading. So happy trading from FountainFX. I hope that answers your question, Paul, and we will talk to you tomorrow. Cheers.